let's talk about a sector which is now touted to be one of the domestic-oriented sectors, and the fact that now we're seeing a lot of shift towards domestic-oriented space. Cement also stands tall when you talk about that. We have Anupama Reddy, who is the Vice President and Co-Group Head Corporate Ratings at ICRA, joining us right now to talk more about the cement space, to understand how should one actually gauge this entire segment and how should they place their bets when you talk about the cement space. A very good morning to you, Anupama. Thank you so much for joining us. This is Cheryl on the other side. And I wanted to understand about the volume growth in particular when you talk about the cement sector, because that's something that you watch out very closely for. And about 6.3% volume growth is what were the expectations for FY25. You have put in an expectation of about 6.6 to 7% for FY26. Do you think that this number is a tad bit conservative for the entire cement space?
Hi, good morning. So ICRA expects the cement volumes to grow by 6 to 7% to around 480 to 485 million metric ton in FY26, backed by the sustained demand from the housing and infrastructure sectors. On the demand front, if we see, the rural housing accounts for around 35 to 37% of the total cement demand in India, followed by the urban housing at 28 to 30% and infrastructure sector at 22 to 24%. So if we take a look at the overall rural demand, ICRA expects the rural demand to remain upbeat, aided by the farm cash flows on account of the Rabi harvest starting from March 2025. Despite the deficient rainfall seen in the ongoing pre-monsoon season, the sowing of the summer crops has also progressed well. So overall, assuming a normal monsoon, ICRA projects the average EVA growth by 3.5 to 4% in FY 2026, which should support the overall rural demand. On the urban housing front also, ICRA projects the launches in the top 7 cities to grow by 9 to 11%, which along with the healthy launches in the last 2 fiscal years should support the cement demand in this segment. On the infrastructure side as well, the Government of India's gross capital outlay at rupees 11.2 trillion in FY 2026 budget estimates, it entails a growth of 10.1%, which is also expected to boost the construction activity, aiding the cement demand. So overall, the demand drivers are expected to be healthy in FY26. While we give an estimate of 6 to 7% at the beginning of the year, it all depends upon how the infra segment is going to ramp up in the subsequent quarters, and there could be an upside to the estimates whatever we are giving now.
Anupama, good morning. This is Shrishti also joining in. But give us a sense that how do you see the pricing environment boding well for the cement pack? Because of late, in the past couple of months, we have seen a bit of an uptick. Even in the month of April, there are reports suggesting about the same. But the sustainability of that is an issue. And along with that, which regions do you expect that the pricing power will come back?
So overall, if you see the cement prices, like you have mentioned, they have shown some signs of recovery in the second half of FY 2025, which was majorly driven by the pickup in the demand after witnessing a significant correction in the average realizations during the first half of FY 2025. In H2 of FY25, if we see overall, when compared to the first half, across the east, west, and the north markets, we have seen a good amount of price increase by around 10 to 15 rupees per bag across these markets. However, the price rise has been relatively lower in the south market by around 5 to 7 rupees per bag. So going forward in Q1 of FY25, while we have seen some amount of price hikes in the month of April, we expect likely that these will sustain in Q1 of FY 2025, and with the onset of the monsoon and the relative lower demand in the Q2 of FY 26, there could be a correction again in the prices, and then marginal pick up from Q3 onwards. So overall, we see the cement prices to witness a marginal growth of around
point taken. Point taken, Anupama. Then thank you so much for joining us today on ET Now. Sorry, there is paucity of time, but you did speak about volume as well as the pricing environment, especially for the cement pack. Thank you so much for taking out time to talk about the cement space. But yes, it is